All right, that is the word coming in from the Boston Fed president, and that's everything that we're tracking globally. But let's talk about all of the cues that you should have on your radar as we start this trading session. We have Ekta, Vahishta, and Nigel all joining us now to run us through the trade setup this morning. Guys, a very good morning to all of you. And Ekta, let me come to you first. We were just going through the global setup. It doesn't look so positive. Looks like the start will definitely be in the red.
Yes, absolutely. Morning, Pavitra, as well as to our viewers. Well, I'll just recap what took place on Friday. The markets ended in the red for the second straight session, but were off lows. FII's net sold around 751 crores, DII's net bought around 890 odd crores. For the week as well, it was just about a flattish close after 4 weeks of a consecutive rise. So there is an absence of cues as we move towards the end of the year. Plus, there is a Thanksgiving holiday in the US this week. So possibly cues on the global front towards the close of the week is going to be lower as well. What is positive for us despite the global weakness is crude prices, which have slipped below $90 as supply fears have receded. Volatility index for us back home is also at a one-year low. Now, in terms of the global cues, yes, the US closed higher on Friday but ended the week with losses. Asia is largely mixed and in the red at this point in time. SGX also indicating a bit of a softer start. Sector-specific interest is likely to continue for our markets as, for example, we saw with the PSU banks last week, and there is a move towards record highs. So there is possibly going to be consolidation ahead of that and maybe some amount of trepidation ahead of that as well. In terms of cues, there is weekly expiry, Fed minutes on Wednesday, ECB minutes on Thursday, and then eventually the RBI policy in the first week of December as well. Just watch out for a lot of macro cues from a lot of the markets this week as well. CPI data from the likes of Hong Kong, Singapore, Malaysia, Japan, all of it is due this week.
All right, Ekta, thanks a lot for getting us all of the cues that we should keep on our radar as we start this brand new week. But let's also talk about the individual stocks that you should watch for. We have Vahishta with the entire list. And Vahishta, it could be a lot about the steel companies today.
Absolutely, Pavitra. Steel companies will be in focus today. Effective 19th of November, the government of India has removed the duties on exports of steel and allied products and reimposed the duties on imports of coking coal and PCI. Now, the export duty of 15% on steel that is removed includes the duties on the hot rolled coils, cold rolled coils, the hot rolled plates and stainless steel. And with this announcement, the stocks that could possibly be in focus are Tata Steel, JSPL, JSW Steel, SAIL, JSL Stainless, NMDC. Moving on, we speak about Aarti Industries, which has signed a binding term sheet for a 20-year period with Deepak Fertilizers and Petrochemicals Corporation Limited for the offtake and supply of nitric acid, which is estimated at more than 8,000 crore rupees. And the deal benefits Aarti Industries by way of a long-term supply security for a key raw material. So some positive news coming over there. Ease My Trip has a board meeting on the 23rd of November to consider and approve the allotment of bonus equity shares. Aurobindo Pharma, there's a completion of US FDA inspection at one of their units, and at the end of the inspection, the company has been issued a Form 483 with 10 observations. RHI Magnesita will be executing a share swap agreement with Dalmia Bharat Refactories to acquire 100% of the equity share capital, and the share consideration has a value of 1,700 crores. Back to you.
All right, Vaisha, thanks a lot for that entire list of stocks. By the way, we also have 2 new listings on the street today, so watch out for those. We have Archean Chemicals as well as 5-Star Finance, which will hit the street, so watch out for those 2 new names. But let's also talk about the FNO cues that we should track, and Nigel has all of that for us. Nigel.
Well, morning. It was a good close actually in Friday's trading session because the Nifty recovered considerably in the last 60 minutes or so. You thought we were going to end close around 18,200. We ended above that 18,300 odd mark. In terms of flows, the FI as well, it's been a little bit, tepid. But remember, there's been a lot of large trades that are taking place. So for the time being, we'll have to ignore that data point and we'll take the fact that the institutions net were buyers out there. What are the FIs doing in the FNO market? Well, they unbound some longs as well as shorts, but they continue to remain net long on the index with close to around 65% of their positioning on the long side. They're buying both calls as well as puts. They bought more calls than puts in Friday's trading session. However, what's telling you that the bears, they feel they're still in the game is the way they're writing calls. And even in Friday's trading session, well, you had the FIs that wrote calls very, very aggressively. Close to around 2 calls were written for every 1 put in Friday's session. What were they writing? 18,400 call, 18,300 call. Just take a look at the massive open interest surge out there. On 18,400 itself, 50 lakh shares getting added out there, as well as 18,300 call very, very active in trade. On the downside, though, the 18,300 puts off a bit of open interest addition, and that perfectly punches in with the low of the day. It was at around 18,209. From there, we saw a bit of a bounce. So the broad range comes up for you on the screen. A move towards 18,200, that signals buying, and that, in fact, was the low of last week. And a move to around 18,450, that becomes a bit of a resistance. For starters, the SGX Nifty is suggesting that you're likely to get that dip, maybe a little bit of a deeper dip, and risk-reward will favor the bull. So we'll keep an eye on that. Back to you.
All right, so let's see how the trading session pans out. Nigel, Ekta, Vahishta, thanks a lot for joining us and taking us through the trade setup this morning. It is time for our short break on the show. But like we told you, the government